Let's touch base with Anant Daga, who's MD and CEO of TCNS Clothing. Anant, good to have you on the show. The issue will be entirely an offer for sale. How much are the co-founders, that is Onkar Pastricha and Arvinder Singh, divesting, and why? And what will be the shareholding post the sale?
So see, as a company, we decided upon an IPO because we thought, it will bring tremendous credibility and visibility to the business. We are a growing consumer business. I think our ability to attract and retain talent, to get better business partners, I think all that goes up. Being consumer brand, I think that will also have a very, very big positive rub-off on our brands. We are also in the industry wherein we see a lot of opportunities going forward, and capital market give us a opportunity to tap into them whenever a reasonable opportunity arises. Once we decided upon this, we understood that as a business we don't need any capital. It's a very capital efficient model. We are a debt free organization, and the only route was OFS. And there we took a cookie cutter approach, and all the stakeholders decided to sell in almost similar proportion to their pre-listing holdings.
Okay, so tell us about what the 2 to 3 years performance has been, what your return ratios read like, and the key milestones that you've targeted for yourself over the next couple of years.
So I'm not sure how much I can talk about future numbers, but in terms of past trajectory, if you look at last 3 years, our sales have grown at a CAGR of 32%, our EBITDAs have grown at a CAGR of 44%, and PAT 50% plus. In terms of return matrix, if you look at our return on average capital employed, it's in the zip code of around 40%. And as a model, we have been running a very capital efficient model for last 3 years with high profitability metrics.
Okay, your standalone revenue for FY17, that stood at 590 crore rupees, the profits at 62 crore rupees, that's more than twice the number in FY16. What's been the trigger of this strong growth, and would you say this is sustainable, or could you even beat it?
See, if you look at our numbers, these are all numbers based on Ind AS. There is a non-cash item which is share-based payments against ESOP. So if you adjust that, then the curves looks much more consistent and not as cheap as it is. We believe market is really big. There's tremendous growth opportunity there, and stable scaled up players will have a good chance of riding this growth wave. And we think as a company, we should also get a fair share of this growth.
Right. What steps are you looking at to undertake to ensure the growth momentum is sustained?
See, as a company, we today have multiple brands in our business. We are also one of the few players who have a proven retail and product model across geographies, across channels. We believe there is an opportunity to do more of the same and grow. Apart from that, there are few areas which could be very interesting in times to come. One, we already are a platform with 3 brands. As a strategy, we think we can add a brand or more in coming times. Again, in terms of channels, we have a strong online and offline presence. We believe going forward, Omni could be a very big play, and that is where we are investing as an organization. In terms of geographies, if you look at various tier market where regionalities, or even if you look at international market, I think all these can throw up some really good growth opportunities.
Right. What's the revenue mix like between your labels, W Aurelia as well as the Wishful brands?
So W is close to 55 to 57, 58%. Aurelia is around 33, 34%, and balance 8 or 9% is Wishful.
What players among the listed space do you consider your closest competitors?
See, the space that we operate in, unfortunately, doesn't have too many of our peers who are on the listed space. They are typically in the unlisted space. If one has to just go by the nomenclature of being a brand business, then you have players like Page, probably Keval Kiran. Otherwise, you have branded business, brand plus retail business like Aditya Birla, Future Lifestyle. So from financial perspective, probably those one can still consider to be peers, but typically our peers are all on the unlisted side.
Okay, could you tell us about your revenue mix between EBOs, large format stores, as well as MBOs, and the retail strategy for your next leg of growth?
So if you look at the current sales pie, 50% comes from EBOs, around 28-29% comes from LFS, 10% out from multi-brand outlet, and around 10 to 11% from international and online space. As an organization, we believe our industry is in very nascent stage even now, and we see huge headroom for growth across channels, across regions. And as such, we have also had our organization structure arranged in the same manner. We have different sales team focusing on fulfilling the potential of each of these channels. And frankly, as a company, we are just focusing on individual channels potential and all channels at the same time.
Share with us your long-term vision and growth plan then.
So see, we believe we are a fashion platform. We are in a space which is very, very exciting. We think Indian ethnic wear space and Indian women's wear space in general is in a very nascent stage. There's an opportunity for some of the players to really become big fashion houses with array of segment leading brands, and that's something that we want to create. In terms of model, we want a de-risk, capital efficient model to be built, which we are already in process of. As an organization, we believe that we have a very, very entrepreneurial culture and a great team with a good track record, and that's something which we want to strengthen even further.
Okay, we'll leave it at that. Thanks very much. We wish you the very best with this offering. Thanks very much for joining us with more details.